Good morning, everybody. Hope everyone is doing wonderfully well as we get started here on this Monday morning. I have a lot for you guys. I'm going to reveal a $250,000 options trade that I just got in late last week. I'm going to show you my exact position. I'm going to talk to you about why I took that position as well. And we're going to go over what the key movers are in today's action because Apple's getting crushed. What the heck's going on there? We have UPST down significantly. Bitcoin over the weekend kind of gave back a fair amount of the gains, although it's creeping back up a little bit today. But the altcoins, oh man, I tell you, the altcoins gave up a lot of those gains that they had late last week as well. What the heck does that mean going into the Federal Reserve? We're going to cover that. We've got to look at the Fed Watch tool as well. What are the markets expecting? How the heck are we going to trade these moves? And I will be live on Wednesday at 2 p.m. Eastern time right here to cover that and trade the action with you guys. All right, so let's get right into it right here. We're going to get into that options trade in just 1 second, but let's quickly go over the pre-market data here. The S&P 500 starting at 4 in the morning, the SPY up a little bit. It has slowly faded back to the flat line. Not a lot of movement here, but you know where there is movement? It is in the NASDAQ 100. If we bring up the NASDAQ 100, look at this nice fade as the NASDAQ is taking a little bit of a beating here, down almost $2 on the QQQ, and that's actually a pretty big move. That is the culprit of NVIDIA being down this morning, and more importantly, Apple. All right, so quickly, let's get right into Apple here. I just want to show you this, then we're going to go right to that options trade so I can talk a little bit about it. But Apple today, look at this dump after a negative report came out about the iPhone 16. And again, my guess is that's why the semiconductors are weaker today as well, is because essentially what you have is if there's less perceived demand on this new iPhone, then AI chips that are going into these type of phones, could that be a negative for demand for the semiconductor AI chips? And therefore, again, look at, this is Apple's drop here today. I'll go over a level on that in just 1 second here, but nonetheless, Apple taking a beating today, down about 2.5%, which is a big move for a $3+ trillion name. All right, we'll come back to this, guys, but let's reveal the options trade that I did. And what I did basically, this is one of my accounts, right? One of my accounts right here, guys, and down right at the bottom here, you can see again the position. This is a long call play on the FXI. FXI is the China ETF. It tracks China markets. All right, I picked up 900 contracts at $2.87. The last price on Friday was $2.81, so I'm down about $5,000 on that position. But you can see right here, if you look closely, and I hope you guys can see this, but $252,900 currently valued at that options trade. Now, what contract was it? Because I know a lot of you guys love your options. A lot of you guys love your 0-day options. So what I want to do is talk about why I don't play those, why I don't even play like next month's. When I buy these positions, I buy long dated. All right, now again, someone with my years of experience, 25 years of experience, I don't even mess with 0-day options. Too risky for me. It's too much of a gamble. And to be honest, the reason I don't is because I've become very aware that when you have to time a trade, right? So it's hard enough to get a trade that you hold for a week or a month or a year accurate enough and be on the right side of it. But when you have something that's expiring within a day, a week, or a month, your time is like, you're basically constraining yourself. You're putting an extra factor of complexity into that. And so I would much rather pay up for time. Time is something we all wish we had more of, right? I mean, heck, I go home every night. I've worked all day. I wish I had more time, right, to just relax even. And so here you have it right here. What did I buy? FXI right here. I bought the January 16, 2026s at $26 strike. That's a $26 strike right there. And as you guys saw, I paid $2.87 for them. Now, by no means am I recommending anyone follow me on this trade. I just want to be honest and open with you guys and show you some of the positions that I take occasionally. I generally trade stocks, commodities, crypto directly, but occasionally I do dabble in long-dated options when I see an opportunity that I like, when the risk-reward to me matters. All right, so again, we all see the position right there. We see, again, the 900 contracts. And by the way, I might even move it up a little bit. I'm going to continue to watch. But I want to talk to you guys a little bit about what I saw over the weekend that makes me very positive on this. So let's get back to the chart here. So if we minimize this and we go back to this, I want to talk about the Hang Seng stock market here. So the Hang Seng stock market, if we go into it, we can see that on the daily chart, you've had this long period of kind of sideways chop, right? Where you've gotten above a wedge pattern. And the wedge pattern, again, can tell us that you have these low pivots, right? Right through here. And then you have this high to high. And then here we had a breakout and then a retrace. And so we have a lot of support right down here on the Hang Seng market. And the Hang Seng market, for those of you that don't know, that is the Hong Kong market. It's essentially the biggest China market out there. You do have the Shanghai Composite, but it's a little bit a smaller one. In any case, what we're looking at here is, in my opinion, you have a breakout of consolidation. And what I love about this is the stock market has been making higher lows, even though the economy in China appears to be struggling and making lower lows. For instance, over the weekend, factory output, investment, even retail sales came in much worse in China than people had expected, than the economists and analysts had expected. Now, in my head, I'm saying, okay, let's watch the Hang Seng Composite. And by the way, the Shanghai was closed for a holiday, and that's why we're not talking about the Shanghai as well. But the key is this. Initially, the stock market opened lower on last night's beginning session. And what we can do is we can go back to the intraday chart. I want to show you guys what it did here. So right here, this is your intraday 10-minute chart on the Hang Seng. So the Hang Seng opened down here, right? And it was down about 1%, a little over 1%. And look what it did. It rallied the entire day, closing green. One of the key things that people overlook, they focus on the data and they're like, oh, that's horrible data. I don't even understand why anyone would want to invest. That's a retail mentality. Don't be a retail trader. Now listen, a lot of us are retail traders, but you don't have to think like a retail trader, right? What you have to say is, okay, what is the price action telling me? What's the price action telling me here? And the price action is very clear. Worse than expected data, and buyers actually stepped in and bought that. That's institutional money. It's not mom and pops. Mom and pops are looking at that data and saying, oh man, this is really bad for China. The institutions are starting to accumulate. David Tepper, Michael Burry, all these players are heavily invested in China. Is there risk to China? Sure. So for me, that even though it's $250,000, it's still a relatively small amount of my overall investable money, allocated properly with other investments, both long and short. Okay, so what we're seeing here again is good signs there. I love charts of stocks. Like if you look at Baidu, it's been one of my favorites. I have this with members of Smart Money stocks and ETFs. If we look at the China data here, or the chart of Baidu, look at this, guys. So we have this beautiful long-dated wedge pattern, right? So you have this wedge pattern going back to essentially 2023. It's tightening, it's tightening, it's tightening. I think eventually we break out like this. Remember, these guys are doing robo-taxis, and robo-taxis in China are even further ahead than they are here in the U.S. So these guys have that AI chip, the AI stuff, all this, essentially the Google of China. But I love this type of pattern because it's a lot of digestion from a move over here where you had the big move up, and then this is all digestion and consolidation. And eventually, again, eventually, not always, but probability, and I talk in probabilities. Remember that for those of you that are new that are watching. Nothing's guaranteed, but it's about getting the probabilities heavily in your favor. Eventually, you get a breakout on this. And I think, again, China stocks, if you compare them to U.S., you got Apple, Microsoft, all these stocks trading at 30 PE ratios. This one's trading at a forward PE of 8. So listen, again, is there a risk of Taiwan? Yes. I would just counter that and say, yes, China may eventually go into Taiwan, but while their economy's in the toilet, very unlikely, because they know that if they did that right now, and I say unlikely, it's not a guarantee, but if they went into Taiwan, there would be even more economic hardships for their people, and we know that China, just like most countries, they want to keep their people happy. Otherwise, issues arise. All right, so that was an interesting little one, but again, FXI is the ETF for China, right? If we bring up the FXI chart here, we can see again, you're kind of putting in this pattern here. I usually like these patterns quite a bit on the FXI, right? So you have this dip, it's kind of like a cup, and then this really long handle pattern. And the key is going to be that breakout. I'm a little preemptive, but remember, I'm giving myself over a year, almost a year and a quarter, basically a year and a quarter on these call options, looking for that bigger breakout to the upside. And what I love about buying options on things that are beaten down, that I have that I think are going to do well is that the premiums that you're paying are relatively low because there's not a lot of interest in buying calls on China right now, right? So people that are selling, the institutions selling those call options, there's going to be a lower options threshold of premium, and you can get them for cheaper essentially. Okay, all right, in any case, let's get back to some other charts here, guys, as we go through. NVIDIA, we talked about this. NVIDIA is taking a hit as well this morning. If we go to that chart, here's your pre-market data on NVIDIA. Not down a lot, but down about $2. Last week, it had a monstrous run. But again, NVIDIA to today, down about $2. Probably won't see a lot of downside before the Fed, but remember, the Fed is on Wednesday. And speaking of the Fed, man, I got a lot to cover this morning. Let's go to the homepage of Verified Investing. Let's scroll down. Let's look at the Fed Watch tool. All right, this is really important here, guys. This is a big change from last week. Big change on the Fed. So what do we have here? We have, look at this. So last week after the CPI and PPI numbers, it was a higher probability that the Fed would only cut 25 basis points. That has now changed to a 50 basis point cut expected. 65% chance that the Fed's going to cut by 50 basis points. All right, there's only a 35% chance they're going to do 25 basis points. Now, this could change. I want to be clear on this. These numbers in real time, like this morning I looked at it like 3 hours ago. This was at 55 to 45, no, 59 to 49. Right? So these are literally real-time numbers that are changing, and I'm going to be watching them. We're going to cover them every morning in these game plans going into that, because this actually really does matter. Because my thought process is this: if they cut 25 basis points, is the market going to be disappointed? Maybe that causes sell-off. If they cut 50 basis points, the market, is it going to fear that, oh my goodness, they had to cut 50, especially before the elections? Why are they doing that? Do they know something about the economy that we don't know? Or do they know that things are crumbling a lot faster? And I think, so there's almost like either way, in my opinion, it could be looked at as a negative. But as you guys know, at 2 p.m. on Wednesday, I will be live right here, and I'm ready to trade this action. Whatever the Fed says, if we get volatility, I'll be trading it as well. All right. Let's jump back into the charts here, guys. We have NVIDIA making a move today. Micron's falling. You can see, look at Micron today. Not a big enough move yet. I may day trade this with the members of the Apex Live Day Trading Room, but this one's interesting. So these guys are doing an offering, UPST, Upstart Holdings. They're doing an offering, so essentially selling shares, diluting shareholders. The stock's down close to 10% this morning, and my guess is, so this is like a buy now, pay later company. My guess is they're starting to see a lot of buy now, pay later people not paying their bills, and they need to raise capital. And honestly, that's probably smart of them to do. Now, if we're looking at levels to go long on this, let me look at here. What do we have? So really at 32, there'll be a little bit of support here. That'll probably be your first level. It's also actually, interestingly enough, if we extend that line out, it goes right here. Let me just check that pre-market print. Yeah, we're around 34.5. So that would be an interesting level potentially for those of you guys that aren't seeing this here. So we have a very clear little level right in here, and we have that and right through this low, and that's right around 32. So 32 may be an interesting tradable level, not a swing trade. By the way, I have no interest in going long something like a buy now, pay later company, considering what I see coming for the economy. And I'm not talking depression. I don't really see depression coming, but do I think an elongated recession that is going to be very tough to come out because the Fed won't be able to cut rates as much as we think they will? And that still is, I still think we're going down to like 3% on the Fed funds rate, but the problem is inflation's not below 2% like it was during COVID, so they could jack it up, right? And then we know what happened when they did lower interest rates that much anyways. But right now, look at $32 as your first key level. If it continues to fall in the coming days, this might be a swing tradable level down here around 24, but that's a long way away. All right. Next up, let's take a look here, guys. Tesla's not doing a whole lot. It's fading just a little bit. I did want to jump back to the NASDAQ 100 real quick. I wanted to show you a line on this chart. So take a look at this, guys. So this is the line that I had up, and we talked about this last week. Look at how the market works with technical analysis. And this is why I use it, guys. It gets rid of the emotion. And emotion is like the number one thing that makes people lose money when they're trading and investing. They follow the crowd. They get too excited. Everyone's talking about the latest, greatest thing. They jump in, and generally they're jumping in near the highs, aka on Bitcoin at 69,000 or even 65,000 back when it was in 2021. Lots of examples of this. But what we had here, right, very clear high pivot. You just connected to this high pivot, and look at where we stopped on the NASDAQ 100 on Friday, right at that line. Today we're trading lower. Okay, so again, it's not to say we can't break through a level, but remember, when I teach you guys the methodology that I go by, 1 hit, no, 2 hits, no, 3 hits, no. So this is your 3rd hit, it's getting rejected. All right, 4th hit is a 50-50, right? 50-50. If it does pull back, 5th hit favors a 70% chance of a break through that level. So again, right now we're only at 1, 2, and 3. So the odds are it's going to pull back. Probabilities, right? It's all about probabilities. And remember, probabilities aren't perfect. It's even here, the chance of a pullback is about 70%. It still leaves 30% it doesn't, but right now we are seeing that 70% come to fruition. And always remember, we want to be the house, of the casino. We want to be the casino. Many investors, they're all, especially, when you're talking zero-day options. And by the way, I know people that do zero-day options relatively well, but it's very, very hard. But that's more the gambler, right? You can score big, but you can also lose 100%. And in general, building real wealth requires smart decision-making. Granted, you often don't make as much on each individual trades, but when you start stacking the wins one after the other, hundreds, thousands, etc., that's when the real wealth comes, and you keep the wealth, because you don't go all in on some crazy play. Again, these are things that I learned the hard way. Trust me, I did plenty of my all-ins back in the day on a small cap and just got annihilated. But I learned, and that's when I started to make real money investing and trading. It was when I was starting to diversify and do the small singles and doubles. One of my favorite sayings is, a trader or investor goes to the Hall of Fame by hitting singles and doubles. Like Wade Boggs, who's from this local area, one of my favorite players growing up when I used to live in Massachusetts and near Boston before I moved to New York. He was just my idol back then. And he was, he wasn't a home run hitter. Home run hitters tend to strike out, right? I mean, look at the greatest home run hitters. Oftentimes they would strike out many, many times. And what happens in trading when you strike out? You lose it all, and that's not okay. All right, so that's where we are at this point in time as we go through here. Bear with me as we get through. So what I want to do now, guys, let's just talk quickly. So we're going to take a quick 30-second break to thank Lux Algo. They are an amazing sponsor. For trading the close, I'm going to go into the signals on my charts and show you how to use the indicator that I've come up with. So tune in at 3:55 p.m. today Eastern time, and I'll show you exactly how you use it, how it tells you exactly when to go long, go short on a reversal signal that I've created. All right. So here it is. Here's Lux Algo.
Have you considered enhancing your trading experience? We have an amazing tool for you. Lux Algo creates next-gen trading indicators to help the world understand the markets in a smarter way. They have the largest user profile on TradingView and are the only official Discord partner in the technical analysis space. Lux Algo Premium operates seamlessly with top platforms, such as TradingView and Discord, making it the perfect tool for every trader. Take your trading analysis to the next level with Lux Algo. Please visit the description below and sign up for Lux Algo today.
All right, back we go, guys. Let's go right into our next chart here. We're looking at gold first. We'll get right to Bitcoin in a second. But notice gold, again, gold continues to grind up here in anticipation of a dovish Fed, right? So especially now that the Fed is now favoring a 50 basis point cut per the Fed Watch tool, that does tell us that gold could be headed towards that 2,660 level. Now, again, I want to show you guys real quick how I came up with that $2,660 price target. I don't find anything fancy like so many of these people, by the way. They come up with these crazy, like way out of left field, like target prices and stuff like that. I'm very direct and logical. The chart has to tell me. If the chart's not telling me, then I don't have anything. All right, I don't have a crystal ball that tells me anything in particular. It's literally just go to the charts and what do the charts tell you? So what I did was I switched to my logarithmic view, and logarithmic bases the charts on basically percentages versus price. And I think that's why it's so useful. So if we zoom out on this, and when you go back a long time or something like Bitcoin, you have to kind of use log because otherwise it's too hard to kind of work through. But when we go to gold here, what do we see? We see there's a pivot high from the 1979 high bull run on gold that goes back right to here. Okay, then you have this logarithmic high pivot in 2011, and the concept is just connect the dots, right? We're not trying to reinvent the wheel. We're not trying to give you guys fancy, I'll use these 10 indicators that make your chart look like this, right? I mean, how many times do you guys watch videos where it's like, oh, guys, don't you see? Look at all the levels here. Isn't that awesome? Like, can't you tell that it's going to go there? No. That's BS. Come on. Let's keep it simple, right? So all we're going to do here is we're going to take a simple trend line, connect it to that high pivot from the bull market of 79 to the high pivot of the bull market in 2011, and just stretch that line out, right? And what you get when you do that, and we zoom in on it, is very clearly a level right up here, which tells us our next resistance point on gold, $2,660. Now, $2,650, $2,660, right in that vicinity, right? I mean, don't quote me on that exact high, but that's that level right there. All right, so again, it just gives us another place to look where if it hits it, we might get a pullback. And the reason why I like pullbacks in gold is because they're buying opportunities, right? So again, at some point we'll get even a bigger pullback because I think too many people are continuing to get on the long side. I thought we'd honestly already get a pullback. It hasn't happened yet, but that's all we're doing here. And it works. That's the crazy thing. Sometimes, like if you look at the best traders in the world, most of them keep it so simple. They don't have a lot of indicators on their charts. They literally use trend line analysis, which is my favorite thing. Parallel lines, which are trend lines, connecting the dots essentially, like when we were kids and we always used to play those games and connect the dots. All right, on to silver, then we're going to get right into Bitcoin here, guys. If we look at silver, the silver chart's actually performing relatively well here. It did break out above a key level here. If we look at this downsloping trend line, even here, we are just above this one for the time being. Now, resistance, needless to say, is going to be $32.50. So, number one, we have to see, does it close above this line today or back below? So, watch that. If it continues to move up, this high pivot right here, which is around 32, I think it's right around 32.50 or so, that's going to be your key resistance on the chart of silver. All right, next up, let's get right into Bitcoin here so we can kind of take a look at what is going on. Bitcoin. I mean, talk about the pivot line that I've had on my chart and walked you guys through for now, probably a month, if not longer than a month. Well, last week was a great week on Bitcoin, but what did I say in every single game plan? I said, listen, great move up, but unless it gets above this line and confirms, you factor in likely pullback. What happens to Bitcoin? Goes right up to it, rejected. That's the power of charts. And again, it's not that hard. It's just, it's basically the midpoint of the channel, and it works. And so what do we know from this? Well, the same thing that I've said to you guys every day, which is that if it confirms above here, boom, it should literally in days probably shoot up there. As long as it stays below, you could easily pull back here and potentially even go down here. So just be aware of that. You can have bounces interim, right? I mean, it can go here and then bounce here. Heck, it could go there, bounce up there, then go down. But ultimately, that's your level to watch right there. Okay, lastly, quickly going to oil today, guys. Oil is pushing up. I still have a potential short level on oil here. If it gets back to this level, I likely will pull the trigger on a short. Interestingly enough, look at this. So you have a down-sloping trend line and an up-sloping trend line right here. So basically 72 to 73, maybe a little bit above 73. That'll be a good level. You expect a breakdown. It confirmed retrace like that. And again, if I'm correct on the macro data, which I could be wrong, but all the things I'm looking at, inverted yield curve now on inverting, Fed starts cutting rates, markets turn down, economy, why is the Fed cutting 50 basis points maybe? Well, they obviously know that the economy is weakening quickly. All those factors tell us about downside. All right, natural gas, lastly, guys, let's touch base on this one. And natural gas did get rejected at this level. A little disappointing. I'm going to be honest with you guys. I'm a little disappointed because I was hoping it would get a little higher and I'd get a short off just above $2.60. I didn't get it. But the cool thing about it is so many people get bent out of shape by missing a trade that it causes them to chase that trade like they'll enter now. I will never do that because it's my level or nothing. And again, that's the discipline that allows me not always to get good entries because sometimes it doesn't matter how good you are in this game, I still have crappy trades. I still have trades that I miss something on or it doesn't go my way and that's the nature of it. That's probabilities. But the key is I want to limit that. I want to maintain a 70-80% success rate in trading, and that's what we can do by being disciplined and following the simple charts. I call it the simple charts because you don't need all the crazy indicators. You need a few trend lines, know your support resistance levels, and know confirmation, know the stuff I teach in the Winning Trader series. On that note, I got to get to my trading room, guys. I think we're doing a live trading, so we'll go live in here in just probably about 15, 20 minutes. So I look forward to seeing you guys tuning in for that. Hopefully we have some live trades in there. It'll be right here on the homepage of Verified Investing or on YouTube. Thank you so much, guys. Have a great week. I'm going to be here with you. walking you through everything. Take care.